Welcome to Buying in Today's Market and Creating a Winning Strategy so you can win your offer. My name is Raphael and I want to welcome you to today's session. Today we're going to cover quite a few things. If you're in the market of buying a house or you're thinking about buying a house, you're in the right place. So let me tell you a little bit about myself. I've been in the credit and mortgage industry since the first recession, and I specialize in leveraging your home to build your worth. So I'm Raphael with California Home Path. And a little bit about me is that we are a team of experienced mortgage professionals dedicated to building through your home buying process. And we offer this through offering about 200 different lenders that are able to lend based on your specific scenario. So that's really good. So if you come here and you don't know if you qualify, whether a traditional loan or you're self-employed or you have some sort of situation, you want to stay onto this presentation because you may have a solution. So today we're going to talk about the strategy. We're going to educate you so you have the confidence to know which direction you want to go. And like I said, we have access to about 200 different lenders that specialize in certain different scenarios, whether you are maybe you are a first-time home buyer, maybe you are an investment buyer, or maybe you just don't report a lot on your taxes and you need some sort of way to find out. So the questions we're going to hold off to the very end, where you can type in the questions or send us an email after this presentation to make sure that we get them answered specifically to your scenario. So what will happen to home prices? Because everyone wants to speculate what's going to happen. And like I said, I've been here since the first recession, so I know what happened then. Everyone had to either do a short sale or a modification. And I thought that's what was going to happen. If you follow the trends, what was going on is that credit card defaults were at all-time high, so were car loans at an all-time high. So what do you think was going to happen next? The home loans, right? So what we didn't foresee was COVID or the interest rate hikes. There's been a lot of changes that have passed, but what you're going to see is that on average, that the home prices that are forecasted is just to maintain about at the same level. So you're not going to see a big drop. And a lot of this is because anyone who fell behind in COVID, the banks are just saying, hey, let's just put all of that money that you owe on the back of the loan. So there's not really a whole lot of inventory right now per se. So if you've come along to about 2023, you'll definitely know that the houses have probably kept the same if you're watching it by now. So one of the key takeaways is what is going to be your home buying strategy. So when you go in and you find a home, the first thing you want to do is get pre-qualified. You don't want to just go look for a home, fall in love with it, only to know that you may not qualify for it. So you got to have some sort of strategy. So let's break down your goals. Let's break down your what I'd say 5 to 10 year vision, because that's really what's going to take place here. It's like, what is your long-term strategy? Are you going to eventually rent it out? Are you going to just build some equity and sell it and build up? So the first thing is we got to get you your process or pre-approval process, that we got to make sure we have a plan in place as what is going to be your down payment. How much money do you have saved up? Do you need down payment assistance? There's tons of down payment assistance programs right now that you can apply for, that they'll put down the 3.5%, and you may even find a house that will help you with the closing costs. So I wouldn't say to shy away from this opportunity, because the first thing you want to do is get yourself into a home, especially if you're renting. Because if you're renting, the only thing that's guaranteed is that you're going to get a rent increase next year. So the pre-approval process, you want to gather your documents. You want to make sure that you have all your documents scanned. That's probably the best thing that you can do, because when you submit an offer, it needs to be with confidence to the seller, because the seller wants to know if you are pre-qualified and you have proof of funds. Those are the two things that they're going to look at. So the difference between being pre-approved and pre-qualified is that pre-qualified is that you submit all of your documentation, we run it through an automated system, and it'll just give us a thumbs up or thumbs down, whether it's called approved eligible or ineligible. And sometimes we work with a lot of lenders that will do what's called a manual underwrite. They will manually do it. But once you get a pre-approval, that means it went through underwriting. There's a pair of eyeballs that looked at it from an underwriter and gave it a stamp of approval. And that stamp of approval usually comes in with something called conditions. And conditions are normal. It's saying, hey, this loan is approved with condition that you give me, these documents. And once you give me these documents, we'll have what's called clear to close. Hope you're following along. So when you have the seller's confidence, you got to win it, because the first approach is what's important to them. A lot of times it's good for maybe your agent to speak to the other agent and asking, what do they need? Do they need an extra 30 days to move out of state? or what is it that they want to do? Do they maybe want to leave some of the furniture? It's not always about the highest and best offer because we're definitely not in the market where it's a buying frenzy. Sometimes everyone has a different scenario. They have different triggers on what or why they're going to accept your offer. So we want to make sure that we start with confidence, not just that you can get the loan done, but maybe you can meet some of those needs that you can only unveil those needs when you speak to them directly. So you got to know your options. You got to explore what's going to be the best loan for you because there's tons of different loans, especially if you're self-employed, you don't know if you should get a regular FHA loan or a conventional loan and the mortgage insurance, or you want to just go down the down payment assistance path. And that's where we have multiple lenders that will help you with the down payment assistance. Now, it's not free money, but there are some ways for them to help you put down the down payment. And then, when you sell it, you may have to pay that back or pay it back in small monthly payments. Every bank is going to work differently. And the mortgage insurance, if you don't put down 20%, you're going to have mortgage insurance. And that's just in case you default. It goes into a big pot. And that's why you pay mortgage insurance until you hit about a 20% value threshold. And then cash advance programs is that a lot of times there are different programs that can compete with cash offers. Right now, they're a little bit tougher to get, or if not impossible, because of the way the market has shifted so much. So market conditions, when they shift in the mortgage industry, programs change overnight. So a lot of times if you take advantage of this stuff, you got to do it right away. You can't sleep on it. You should think about it, maybe sleep on it like for a night, but not for too long. So the home buying strategy is we want to get ready to explore our options. We want to have our funds ready and we want to lock in the details. So the details is if you're going to have gift funds, we need a gift letter. We want to make sure that depending on what your scenario is, we want to make sure that we have that in writing or we have a plan because by the time we get approved, we got to turn those conditions in and those conditions need to be met with a specific time frame so you can remove what's called your contingencies. And there's two type of contingencies. There's an inspection for the house. There's that, and then there's also a appraisal contingency. So we'll call it three because there's also a finance contingency, which is can we get this loan done? So we want to make sure that we get this all in before those contingencies have to be met with the party saying yes, we waive our rights, we're moving forward, and our deposit's already in, we're moving forward. So selling, it's the existing homes right now is that you have to create a strategy because when you go into the market, the houses are not always going to fit the box. Some are going to be smaller, some are going to bigger, over your budget. So those are the things we have to look and anticipate. Where is your wiggle room? Because a lot of times if you go into it, you're going to be all over the place. A lot of times you want to start in a city or you want a certain type of home and then you'll end up with something completely different or more expensive that you can't really afford. So that's usually what I see is that if you tell someone they have a certain budget, they'll want the $1 million house. And a lot of times they can't qualify for it. So a lot of it is just having a strategy so you don't waste time looking at homes you, one, can't afford, and two, you're probably missing out on a lot of opportunities of buying a home that you can afford. So we have to be realistic about what you can offer. A lot of times we have to cover what are going to be the repairs that we're asking for because a lot of times the home may need some light repairs or some major repairs. It could be the roof, it could be the flooring, it could be wiring, it could be so many different things. And that's why I highly recommend that you get a house inspection done, only because it'll give you a full report, a professional report of what needs to be fixed or if nothing needs to be fixed. And the next thing is appliances. What's going to stay? A lot of times just because you see something like a washer and dryer doesn't mean it's going to stay there. So you want to make sure that when you're making an offer, you're saying, hey, this are the repairs that I want. This is the appliances. I want to make sure that they're staying here. And then maybe the furniture. Maybe they plan on just leaving it there when you thought they were going to take it with them. So you want to be very forefront of what's going to happen with that furniture and then any other extras that you see in the house as well. So when you have a comfortable plan, you got to stick to it because a lot of times you want to change and life happens and things change. However, sticking to your strategy is going to make sure you have the best experience because if you're switching your strategy, that's going to confuse not only your realtor, not only your lender, but also the other parties involved as well. So you want to make sure that you stick to your plan because it helps everyone move along as well. So here's some tips that we have found that have worked over the years of what makes your best offers. One, know your budget. Because a lot of times you want to offer something you may not qualify for, and that's why you want to make sure that you talk to your lender, someone like myself, because you want to know what is your budget, or how do we exceed that budget? Maybe we need to bring down the balance a little bit. And then we have to be ready to move fast. In this mortgage world, things just move super fast, and if you don't act on it, someone could submit another offer, or we have deadlines as soon as we're into contract. As soon as we're into contract, we have quite a few deadlines we need to put in, like your deposit, ordering an appraisal, and maybe turning in some documents to the underwriter. So a lot of times we're going to be in contact consistently until you get your final clear to close. So those are the things that I would recommend. Other than that, it's just working with a licensed real estate professional, of course, someone maybe who's local to the area, who's willing to commit the time to invest in you, and making sure they find the right house that is the best fit for you and your family. And then making a strong but fair offer. A lot of times you don't want to lowball, what it's called, or submit a low offer, unless you have some realistic outline of why you're making that offer. So if you're saying, hey, the floor needs changed, and maybe that roof is about 50 years old, we're going to need to get some discounts here. We need to figure out what we need to offer. So a lot of times it's working directly with your realtor who understands the market and what is the house valued, or what you should ask for, because there's a lot of things that you may not know that you can ask for by working with a licensed realtor. And then you have to be flexible. What I mean by this is that a lot of times they may fix a certain issue, but they may not fix a broken tile of floor. So a lot of times you have to figure out, okay, is it worth for me to, lose this house because they don't want to fix this small little square on the floor? Well, that would be, up to your decision. So you have to be flexible when it comes to negotiating, because you want to make sure that you're winning the offer, but you're also flexible, because something like that could be replaced very easily. And then we have to set the realistic expectations. So we got to sweeten the offer. A lot of times we know that if you close a little bit faster, speed helps everything. So if you say, hey, we can close in X amount of days, sellers love that, because they also have to make moves with the proceeds or the money that they're going to get. So here's what to do next. I want you to reach out to myself or my team to create a mortgage strategy for you, because right now in this market, everything is going to change. And the best thing you can do is get yourself in contact with me to make sure that you are pre-qualified and you have a plan in place, whether it's for the next 5 or 10 years, and that we connect you with one of preferred agents that we know, like, and trust, that have also taken care of our clients. And the best thing I can do is, if you go to our website, californiahomepath.com, right there you can just click apply, submit your information, get in contact with myself or one of our team members to make sure we get you pre-qualified, and then answer a lot of those questions. Maybe you have a specific scenario. I want to listen to it. Remember, we have 200 lenders that we work with now. And what does that mean to you? It just means we have more options to go out there and find the best. And that's just something that we do because we're brokers. It's not like we're a single bank with one guideline. We work with many different products in our profession as well. So if you have any questions, reach out to us. Thanks for sticking out this long. I appreciate your time, and we'll talk to you soon.